Hi, this is Zach from Zach's Traders Cafe on Friday the 13th of May, and it looks like it's unlucky for the FTSE at the moment with the key reversal to the downside yesterday. There was a failure at the 200-day moving average, or just below that, for yesterday's high. 50-day moving average 62.01, that's the blue line there, also capping the price action, and really it's difficult to see how it's going to avoid at least a minor push to the downside. The problem here is that the formation that we have with this rising trend channel could also be a rising wedge pattern, which is a negative one. That would target at least the 60.36 March floor, and after that much lower. So on the edge of our seats with that. RSI in the wrong place as well. We've had the failure below RSI 50 at RSI 39.9. Slight support, a chance of support yet, so it's not totally out of the water. So really, one would be waiting for an end of day close back below 60.36, really to confirm the possibility of a serious downside phase. Onto the DAX, which tends to be a leading indicator, a leading market. Here, though, it's in a similar position to the FTSE with the key reversal to the downside. Initial support here, 97.37, but doesn't look like a very important one. We're back below the 50-day moving average at 99.45 rather, and the only real support, the main supports here are 9,500, and then towards 91, 9,200, which is the top of the February gap. So 9,500 really on the cards while we are below the 50-day moving average at 99.45. That would also break the floor of this rising trend channel, which effectively we have, even though the line is not quite drawn in that way. Onto the Dow, and it's usually been the case in the recent past that we've seen the US markets save the European ones. Here the Dow hasn't broken down yet, still above its 50-day moving average at 17,627. The main support here, 17,500, and really, unless that breaks, one would have to be a buyer on dips rather than trying to break this market down, although we did have that 2-day 20-day moving average failure midweek, so on guard for a breakdown, but above 17,500, still a bit early to go for that. For the S&P, we've had the bounce off the 50-day moving average, 2053, the low, almost exactly the low for yesterday. If you're thinking of buying it, we need an end-of-day close at 2077 or above. But at the moment, really waiting for either a break of the 20-day or 50-day line to give us fresh direction. The Nasdaq has been the weaker of the leading US indices. Here, it's sandwiched between the 50-day moving average 44.21 and the 10-day moving average around current levels. Once again, probably easiest just to wait for a break either of 4,300 or 44.20 before going for a bigger view. The RSI, though, is actually quite clear in the sense that we've had a failure at the 50 level, the neutral 50 level, and back at 42. So that is a leading indicator on downside, and aggressive traders and aggressive bears would be looking for opportunities to short this market with a stop loss just above the 50-day line. Onto the currencies, and they have been rather becalmed of late. The cable continuing that trend. We're still in this little range either side of 144. Best to wait for an end of day close either above the 10-day moving average 144.75, the green line, or the 50-day moving average at 143.33. If there's anything as far as the RSI indicator is concerned, we've got a break of this uptrend line which has been in place since January, so that does suggest that a bearish phase could be upon us, and that might be worth bearing in mind in terms of your positions, in the sense that if the 50-day line does go, you want to get out of a long position pretty sharpish. For the euro, we're still basically stuck in the same ranges between the 10-day at 114.21 and the 50-day at 112.96. Not really much point doing anything other than trading that range in the meantime, and then waiting for an end-of-day close outside it. Obviously, the overall pattern here is still an uptrend within a rising trend channel from November. Onto the dollar yen, which has been the most active and interesting of the currencies of late. In fact, even this one hasn't really done that much so far this week. 107.86, the stop loss for the recovery players here. Still probably backing the idea of a 110 spike at some point to the top of this channel from the start of the year. End of day close below the 10-day moving average resumes the downside argument back to 105. But even though the RSI is leading us down, maybe worth waiting for at least the 10-day average to break before pressing the sell button. On to gold, which is starting to look a little bit more sprightly as we end the week. Support coming in at the 20-day moving average as expected. That's at 1262 currently. We want to see an end of day close above the 10-day moving average at 1276, which shouldn't be too difficult today. We're already up $10, but obviously wait for that trigger to be activated. After that, the initial target $1,300 and then 1350. RSI at 55, so quite healthy as far as leading us higher rather than lower, given that's on the right side of neutral. That's it from me. More updates at the same time on Monday.